Welcome back to The Exchange, everybody. Wheat's falling today by about 8%, but supply concerns and Russia's invasion of Ukraine have pushed prices to around a 14-year high this week. My next guest says ag equipment stocks should be on the defense as the global market reacts. Joining me now is Stephen Volkmann. He's senior machinery analyst at Jefferies. Stephen, it's great to see you. And where does this leave a company like Deere?
Yes, thanks for having me. So, obviously both Russia and Ukraine are key producers of wheat and to some extent corn as well. This is going to make the global markets tighter and obviously result in higher prices. And, higher prices attract investment. The only way to sort of cure higher prices is more production, and that's going to require more equipment.
Yeah, so this would seem to be bullish. I mean, the stock is up, at least it's up year to date, which is more than we can say for most. How do you think it's priced? What's your price expectation, or I should say price target on the stock?
Yeah, I mean, we think this is a great long-term story. I mean, obviously, this Ukraine situation is one that is, kind of near-term. But, at the end of the day, there's a lot of big trends at Deere's back here, including technology. We think the tightness in global markets for crops are going to be sort of something that's with us for quite a while due to climate change and so forth. We have a $450 price target on this, but this is a long-term story that's just actually kind of helped by this Ukraine situation, but has a lot more going for it than that.
Yeah, I mean, Deere's only at 344 today, so that's some pretty nice upside. It's not the only name you like either. Caterpillar, Cummins, tell me about those.
Yeah, Cat we actually have a hold on, but I can see a situation where, tightness in oil and gas markets, which, you guys have reported on a ton, could drive some additional investment there. That would clearly benefit Caterpillar. Later cycle, they should get some benefit from the U.S. infrastructure bill as well, although Deere will too. That's still about 25% of their business. Important to remember that. But that's one that could benefit. And we think Cummins is actually interesting here. We do have a buy rating on that one. If we have issues with, the availability of various battery type commodities, that could slow the adoption of batteryification in a lot of these big engine markets. And Cummins has some great renewable fuel, sort of fuel agnostic opportunities to sort of do decarbonization without batteries.
That is a fascinating point with a lot of further implications to think through if you're right about batteries. I guess let me just ask finally, are you saying that these are more or less boom times for the U.S. farming industry right now?
Yeah, they really are. I mean, the only issue that farmers have is that their input costs are also up a lot. And frankly, this Ukraine situation doesn't help that. But the fact is, with higher crop prices, you get higher farm incomes, and they traditionally love to reinvest in the core business. So, yeah, it is kind of boom time.
That's a big turnaround from a couple years ago, and a welcome one. Stephen, thanks so much. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.